Got record on. All right. I still can't hear you. You there?
All right, you there?
Got you. Got you. Hear me?
1 second here. I've been having some mix-ups with my speakers lately. Let's see. Let's try that again. Does that work?
Testing.
There we go.
There he is. Chase, what's up, brother?
Dude, I'm good, man. How are you?
Good, brother. Well, you asked. So just came out with the new book. Pretty proud of it. Broke to $250,000. I'm doing awesome.
I'm telling you, man. Yeah, you know, when we had talked about the cover of the book, and I saw what you were up to, man, that's incredible. Yeah, I'm looking forward to checking it out.
Hell yeah. I'm going to send you your copy as soon as we finish up with this.
Oh, there we go. Perfect. All right.
Done. Make it simple. So, Chase, Cerda, am I pronouncing your name right?
Yeah, it's Chance.
Chance.
Yeah.
You know, there's an N there, right?
Trust me, it's happened my whole life.
All right. So, basically, you're out of Texas, right?
Mm-hmm. Yep.
Big state of Texas. You do financial planning, more like, I'm going to mess it up, but you make sure that people who make money save money.
Exactly. Yeah. So the motto is it's not just about how much you make, it's about how much you keep, right?
Right.
And so a lot of people are really good at offense, going out and making money, but so many times those same people are really bad at defense when it comes to keeping money.
Yeah.
And so that's what I go in and help do.
Yeah, it makes sense. Personal experience, like made a lot of money and then went and looked at my bank account. I was like, dude, like, where's it all going? I'm writing the government a $70,000 check. Like, what's this about?
Well,
I don't remember them agreeing to this deal. Like,
no. Yeah, they love it. You know, they it's interesting, especially when it comes to taxes, because what you experienced is what so many of us go through. We're hustling, we're grinding, we're building, we're doing all this stuff, and we feel like we're putting out so much effort, and then we go look at our bank account, and we're like, what the hell just happened? Like,
where's it all at?
Where's it at?
It was tough year. I'll be real.
I'm telling you, yeah. Well, and it's more than just. Here's the thing I figured out. It's more than just the money side of it, right? Because what I've seen happen is we're doing all this and doing all this. We look at our bank account and we're like, man, we're caught off guard, and so it plants this seed of doubt into our head of, why am I doing all this? Like, wouldn't it just be easier to go get a job? And like, I mean, if I'm not gonna have any money, I might as well like not work as hard. And so it begins this open loop. So yeah, losing money on taxes sucks. Everyone hates that, right? And that one's pretty simple. But you know what I find, one of the coolest things I find is when clients go through that process and finally have certainty that they're not overpaying.
Right.
The energetic boost that comes from that is more important than the money that they save.
Yeah, no, I agree with you, because it took me a little while, because one of my coaches had to get back in my head, because I was like, dude, like, you know, fuck this, I'm done, like, I'm out. And he was like, no, you've got to get past that barrier. You just got to get smarter with how you're spending your money. You got to invest it the right way, put it into the right things. This way, it's still making more, and your tax bill comes down because you're putting money back into the system. You're investing it the right way.
Absolutely. You know, and here's one of the things, and it's taken me a long time to learn this, but really, you know, I'm in a place where a lot of, you know, consultants or business people or even some CPAs and accountants feel like the IRS is out to get us. And there is, I mean, that can be argued very easily, right? And that's kind of the mentality people have. Yeah. But man, it's incredible when you actually kind of your eyes are open to see all the different benefits and all the loopholes and all the different strategies that are available. It's mind blowing. I mean, the tax code is about 70,000 pages. So to put that in perspective, that's about 5 times as big as the Bible. And
if you were to put that into perspective, it's not that big.
Yeah.
Now available, Amazon.
That's about this. Yeah. The book that you've written, the table of contents is about that big for the tax code.
It's 150 pages. So the tax code's like 100 times bigger.
Yeah. It's crazy. And so people, you know, the IRS really, they're a business, right?
Yeah.
And they have 2 products. They sell fear and they sell confusion.
Yep.
And if you're buying, they're making good money, and they'll do it all day long. And so the tax code is there to help us, but they want to make sure it's only being taken advantage of by the people that are really, really committed to their business and committed to growing. And so that's why they make it so confusing, and they put so much fear around audits and owing the government money and all of this. I mean, it's such an emotional part of our business that a lot of people don't realize.
And you're right. Like, so they incentivize us as business owners, as real estate investors, and on some level in stocks, right? They incentivize us. They give us credits. They give us all these different benefits by investing, right?
Mm-hmm.
But if you're just working 9 to 5, they're like, look, you're basically taken from the system. You're not really contributing in a really meaningful way that creates jobs or creates housing. And so they, why would they benefit, a normal person? But when you start building a business to start building real estate assets, the government is actually on our side. Like, the more I think about it, like, my partner. In the beginning, though, it felt like a partner taking advantage of me.
I know. Well, and you know what's funny is you make a great point, because we've got to think back when the tax code was created. 90% of Americans were self-employed. They were the farmer, they were the blacksmith, they were the guy, the barber, whatever it was. So now we look at the United States, and now that has flipped. So instead of 90% of Americans being business owners, we've only got about 10%.
Right.
And so, so many times, how many times have you and I heard the rich keep getting richer? Well, it's because they're using the freaking tax code. That's it.
My dad used to say that growing up. Like, I talk about it in the book.
Oh, wow. There we go.
All the time. It's like, oh, rich get richer and the poor stay poor. And it's true. And it's because they know how to use the system. It's not that they're doing anything wrong. They're literally just following the rules in that 77,000 word book or page book. They're just following the rules that have been written by our forefathers.
That's it, man. That's it. And think about it like this. A lot of people are scared of the tax code because it can seem so confusing, right? But imagine if you grew up as an Aborigine in Australia, let's say, right? And you were brought to the United States, and the first thing they did when you got to the United States was took you to a NFL football game, a live game, right? Would that not be confusing as hell? Like, you've got these guys running around. Sometimes they throw it. Sometimes they run with it. Sometimes they kick it. People are blowing whistles. There's zebras on the field, like throwing these.
Sometimes they just stand still for no reason.
Right. So it would seem very complicated, but most of us that have grown up in this culture and around the sport, it's pretty simple, right? And the rules evolve and change with the game. And it's the same way for the tax code. And really, learning the basics really is it doesn't take very much brain power, but it saves a lot of money, and that money compounds. So many times we think, oh, I'm only going to save that one strategy. I'm only going to save $1,000 this year. Well, yeah, but you're going to be investing for another 30 years.
Right.
And then that compounds, and now, and so it grows and it grows and it grows. And so that's what gets me kind of fired up about it.
That's the cool stuff. And with our asset, like with real estate, it ends up eventually paying itself off.
Absolutely.
Your compounding effect jumps once the mortgage is paid. So I'm sold, right? I'm sold. Everybody who's listening is sold. What are some of the strategies, like beginning, like basic, this is somebody who, because I know you mentioned somebody who's making about 100,000 this is where they're starting to become aware of it.
Right.
Business owners, they're not really in a tough bracket. It's really around that, you mentioned like the 80 to 120.
80 to 100K.
That's painful. What are like beginning tips that you give people?
Okay, yeah. So one of the biggest things that you can do is have your business set up correctly, right? So many times we think an LLC is like, oh, I'm an LLC, I don't have to worry about it, right? But there's two parts to an LLC. There's the legal side and there's the tax side, and those are two very different things.
Right.
And I'm sure most of the people that are listening, and I'm sure you've read through this, but Rich Dad Poor Dad, right?
Yep.
He talks about, hey, a corporation. Do you have it right there?
I got another book.
There we go. I've gone through that book. I'm on my 11th round with that book.
Nice.
And that's actually one of the ways that that was actually where I started some of this, was because he talks so much about, hey, a corporation is not this big headquarters. I mean, it's 8 sheets of paper. And that's so we have to realize from from a tax perspective, how the business is set up, whether it's a C Corp, whether it's an S Corp, whether it's a partnership. I mean, there's so many different ways. That is one of the most critical things if you're not set up correctly, right? So let's say someone's making $100,000 self-employed and they're not set up correctly. Their tax bracket, their tax rate is going to be 39.3%.
Right. Yeah.
And it's going to eat you alive.
Killer year.
Yeah. Yeah. And so, and that's what a lot of people don't realize is when we jump from kind of an employee mentality, making six figures, to making six figures self-employed, it's a totally different ballgame.
If you don't adjust your tax strategy, you get hammered. You get crushed. Yep.
You would be better off working a job.
Yeah, it's true. If you don't do it intelligently, you're almost losing money.
Yeah, absolutely. So that's one of the biggest things. The other thing too
is what is the setup? Because you're right, we got to evaluate it. But what is the setup? Is it an LLC or is it
right? So there's a couple different. In a lot of cases, an S corp is typically a really good route to go.
Yep.
So an S corp is really good, but with some of the changes, right? C corps, there's C corps as well that can also provide a lot of benefit. But here's the thing. If someone ever tells you, if you talk to someone and tell them what you have going on in less than 3 minutes and they tell you what to do, don't do it.
All right. So basically you gotta get to a professional like Chance Cerda, who's gonna give his phone number. Actually, throw your phone number right now, just in case.
Yeah. So if you need help with this,
so what's easiest for you?
Yeah, and actually a text is the easiest way to get to me. So my cell phone, I have it on me all the time, 940-704-5323. And so that's 940-704-5323. And here's the thing. It's that, if I were to go to a doctor and say, okay, doc, my knee hurts. And the doctor asks two questions, say, okay, you need to take this, right? Well, my knee hurting could be connected to something in my blood, right? So until someone sits down with you and researches and looks at the big picture, it would be considered malpractice for a professional like me to tell someone how to set up their business without doing the due diligence, right?
Yeah, we get that in real estate all the time. They'll say, "Oh, what's the price of my house?" I haven't been in your house. I've got to get into it. I got to see it, and then I'll be able to evaluate the property, what it's going to actually be worth. Same strategy. I got you.
And you know how it goes, and it's human nature. We just want a simple answer.
What's the price, though? Bro.
Yeah, this isn't a sandwich at Subway. Like this is.
Even then, you still get to choose what you put on it, right?
and so that having your business set up correctly is really the number one most important thing that you can look at doing. And there's a lot of other strategies. I mean, there's some things out there that even sometimes I'm like, man, is that legal? But it's in the tax code. It's there for us. Like here's one of my favorite ones. It's called the Augusta strategy, right?
Yeah.
So there's a golf tournament in Augusta, Georgia every year. And it just so happened that everyone that a lot of people that lived on the golf course actually were involved in some of the tax regulations and some of those different things, right? So they passed a law that states that you can rent your house out for 14 non-consecutive days out of the year.
Yep.
And all of that money is tax-free.
Yes.
So
we do this in Florida.
Really? Okay.
Strategy. Yep.
That's so you have 14 days of tax-free income.
Yep.
Come on with it. And what's really cool is, most times you can rent that property to your business.
Right.
And so your business is getting the write-off, the deduction from it. Yep. And then you're getting the income personally at 0% tax. Now that's the tax code.
Yeah. That's just one of those pages, one of those 77,000.
Yeah. Exactly.
So what's one of the next steps as you're going through? You're looking at their entity. Then what do you look at next?
So we have to look at the big picture. So this is one of the biggest things. A lot of people think filing taxes is you just file some paperwork, but that is actually the least important thing you can do. The most important thing you can do is plan ahead of time. So I look at it like this, is that most people, when they file their taxes, it's like building a house, right?
Yep.
So they're building a house in, let's say, April, and they have never created a blueprint. They've never had an architect or an engineer actually go in and say, hey, this is what we need to do ahead of time.
Somehow got approval from the city and they just started building.
They just said, hey, we got some concrete. We've got some 2x4s. Let's get this thing going. That's it.
Somewhere on the Southwest. They don't do that in New England.
Yeah. Yeah, here in Texas that happens way too often.
No way.
But so that's one of the most important things, is that the planning is done ahead of time, because the last thing the IRS wants is someone to get to the end of the year and say, oh God, we owe 38,000. Shit, what can we do? Right? That's what we don't want. And so it's so critical to plan ahead of time. And really, with whoever is looking at kind of your well-being from a tax perspective, and they have to know you as a person.
Right.
Because here's the thing, how we live our lives dictates what we can and can't use. And so until someone really gets to understand who you are as a person today, and then what it is you're building, what it is that you're trying to grow. Are you going to build up a portfolio of 15 properties and sell it in 3 years? That is a totally different strategy and setup than someone who's flipping and wants to do 14 flips a year.
Right. You're absolutely right. And it's the same thing. There's hybrid strategies in between where it's, hey, I'm going to do a flip, but I'm holding the flip for a year. I'm renting it, then I'm going to sell it. Like, there's all sorts of different strategies to play with the game. Exactly.
And the tax code, the tax code is about gray area, right? The tax code is entirely gray. And so you need someone that can navigate those gray areas as situations come up. Like, I was just on the phone with a guy yesterday, and this is interesting. And we'll see this more. He lives in an RV, and he just travels around the United States. Like, he was in Oregon overlooking the beach yesterday. We were talking.
Top lifestyle, man.
Exactly. And so, and remember, the tax code was created 200 years ago. Like, no one was doing that 200 years ago.
I mean, they had like their horse, and they were going out to like Colorado to dig gold.
Yeah. But it was a total different world. And so, and it can be scary. And the thing is that the IRS does not play around. They do not play around like with their money. They're like the most unforgiving pimp that you can imagine.
That's a perfect way to put it.
The pimp.
He's like, I will break your legs if you. I'm sending you to jail.
Exactly.
I'm gonna take all your money while I do it. Everything's getting seized.
That's how it goes, man. And what's so sad is that there's business. This business and investing is hard.
It's complex. Like you said, there's gray areas.
Mm-hmm.
You just need a pro, because like for you, it's not gray; it's black and white.
Mm-hmm.
Right? You see, like, gray is just shades of black and white, but you can see them. But the average business owner, investor, just doesn't see it. Like, I can evaluate a deal with my eyes closed.
Right.
Some people would say it's gray area.
Mm-hmm.
And you just figured it out. Yeah, it's complex sometimes, but you go to the professional, we're gonna be all right.
Yeah. Well, and just like you do when you look at enough, you have the right perspective. And that's really what one of the things it comes down to is just perspective, and being able to really understand that, hey, you know what? This might not be fun. It might not be sexy, but it's profitable. And that's the thing, is to be able to, I mean, one of my favorite metrics I love seeing is having the actual dollar amount of taxes saved. Right. And so like this year, right now, we're on $1 million campaign to do $1 million for savings for clients. We're a little over 820,000. I actually need to update it. We're at about $840,000 in savings for this year.
Yep.
Yeah.
So, yeah.
And so, man, knowing that, the way I see this is like, man, if people like you and I, people that want to build and want to grow and want to succeed on a financial level, but have the heart to really help people.
Yeah.
If there's $1 million that would have gone to the government that is now in mine and yours pocket, the world can be a better place. And that's what gets me pumped.
And they're reinvesting in their lives and their families and their cities and their businesses. It's just, we'd rather, I love, I'm sure Trump is doing a great job building walls. Rather, I got nothing to say, but I'd rather see our people, our clients, our friends, put the money where they feel it's important.
That's it,
I
man.
like that.
And that's really what it comes down to. All the strategies and all that stuff. I mean, yes, it's technical and yes, it's needed. But the main thing is that we realize the bigger picture. And that's really what I'm here to create. So
nice, dude. I love it. So Chance, obviously brought you on based off, we were just having a great phone call.
Yeah.
And you started like hitting points in my head. I was like, dude, like, how do I get this guy to give me some free information. I was like, I'm going to do a podcast. Now let's fix my financial situation, all right?
Well played. Well played.
So a lot of my investors, this is one of the issues they have coming in is they'll buy a 3-family. They're fine the first year, the second year. They go and they buy another one. And now they've got these 2 properties and they're cash flowing. And their equity is getting up there. And it's kind of a decision on, do you sell this or do you keep it? Now, I know the strategy originally is, hey, we're going to hold this forever. That's because we all get into the game thinking, I'm just going to keep buying. I'll never sell. I'm never going to flip. And then suddenly equity is in your building and you realize, like, oh my God, like, should I refinance this? But now the mortgage becomes more than the building can support. Or do I sell it and get myself a bigger building that can support a higher mortgage? Right? Like, sell a 3 to go to a 6. And this is a strategy I talk about all the time because it makes sense.
Yeah.
But you pay on the tax side of that.
Absolutely. So yeah, one of the things, of course, one of the most critical when it comes to real estate strategies is the 1031.
Yeah.
The 1031 is literally manna from heaven, from our rich Uncle Sam. And so that's one of the things that really is so critical is that you have the ability to execute those, because you and I both know those are not always easy to do. I mean, placing money in a short amount of time on a good deal.
Yeah.
When everybody else is trying to find the same deal and place the money too. I mean, it can.
It's like yoga. Like you ever watch like the goat yoga though? Like goat yoga's already hard. Let's have a goat jumping on top of you as you're trying to balance on one leg. This is Mario.
That's it.
31 exchange.
That's it. Yeah. And those can be tough. And so having one of the biggest things that I like to be able to do is having someone that can run the spread on those numbers. And you've got to have scenarios, right? We've got to have scenario A, we do a 1031. Scenario B, we don't get the 1031. Then what happens? How does that work? And someone that can, because until you have those numbers and see the tax implications of it, you're kind of just shooting in the dark.
Yeah, and that's reality. So I've never done a 1031. Everything I've ever sold, I didn't have anything lined up. I couldn't justify it. So I've sat in the cash. I've paid my capital gains. And a lot of times I look at it, I'm like, man, like that 15%, it's added up to like 150,000 at this point, and it annoys me a little bit, right?
Yeah.
So part of the deal 6 months later. It's like, come on. So there's I was talking to a guy, all he does is like 1031s. This is like his strategy. His main bread and butter is this.
Wow. Yeah.
And he was talking about a reverse 1031 exchange. Have you ever heard of that?
I'm not familiar with it. What was his thoughts on it?
So the premise of a reverse 1031 is you actually go buy the property, then you sell the property, right? You buy it and sign that and say, hey, this is anything I sell, this is going to go to it eventually.
Gotcha.
And it was just, we talk about tax 1031, so it seemed natural to me to bring it up. But what other, like, does it make sense? Because I've done it, but like I say in the book, like the things I've done, some of the things I've done were big mistakes. And I mentioned them when I made mistakes. And like, I may have made a mistake by paying the capital gains. What other strategies would you have suggested?
Yeah. So, sometimes there is no other option, right? Because one of the things that we can get too far into is making decisions based on the tax implications, right? The tax side of it is all, especially in real estate. I mean, one bad deal, especially when you're first getting started. Oh yeah. You have one bad deal.
Yep.
It doesn't matter what your tax rate was. It doesn't matter.
Yep.
And so, there's so many different factors, and really to me, it's hard to say do this or do that, but really it's about one, what's my mindset going in? Because the rules really, when you get down to them, are pretty simple. But what am I trying to build long term? Am I willing to give up 15% now so that I can hit that 10-year goal, or am I going for something more short term, right? And really just having someone that you can brainstorm this with, and that can really help understand not just where you're going, but the technical side of the tax codes and how to help you navigate through that, right? It's just like the role that realtors play, right? There's so many different decisions that come down to buying a house. Because if it was up to most of us, we'd be like, yeah, let's go buy that one. We wouldn't think about inspections. We wouldn't think about appraisals. We would just go buy the house, right?
Right.
And so,
porch looks good. I like the sunroof. Like, we're good. Yeah,
that's it.
It's got a hose in hers closet. That's all we needed.
That's it.
Nope.
So having someone almost like that kind of realtor partnership where you can really brainstorm. They can really look at the scenario and kind of allow you to see things that sometimes we just don't see just because that's not our area of expertise. So.
Yeah, Chance. Honestly, that's about our time, man. But I think that this conversation is exactly what investors specifically and real estate agents, because my first big bill was from being an agent. It was from all my active income and not having expenses to offset it. I pay, in fact, and you know this, I pay more tax on my agency than I've ever paid on my flips or on my rental properties because it's tough we don't have a lot of expenses.
Right.
It's really tough. Although I did do a lot of traveling last year, and I took like $30,000 in courses. Yeah. So like that was a way like you can invest in your mind, you can invest in your business that way. But yeah, Chance, you got a ton of knowledge in your head. Do you have a website? Do you have an email address? Where can people find out more information about you? And then you mentioned Rich Dad Poor Dad as a good book, but if people are really interested in getting into the tax code or they're looking to advance themselves, because my audience is real estate agents and investors, they're looking to kind of take the next step as far as just educating themselves a little more. When they do contact you, which I'm suggesting they do, they can have a better educated conversation with you. What's an easy to read book for them to kind of get started?
Absolutely. So from a mindset perspective, Rich Dad Poor Dad is one of the best. But from more of a technical standpoint, the IRS actually puts out videos explaining some of the strategies.
Really?
And so you can hop onto YouTube. And now the reason I like these now, yep. Granted, they're kind of boring.
I can only imagine.
This is the IRS we're talking about. So they're a little boring.
This is what you're going to do here. Section form ABC 12 13 12 B 12.
Yeah. So if you can get through the monotone training, but they actually do have a lot of short little clips that kind of talk about some of these strategies. And the reason I do prefer those is there's a lot of people like myself they'll say, hey, you can use this strategy, you can use this, but I would always rather take the IRS's word for it, because if they say it, I can point back and say, nope, this is what you said.
But look at what you said here, though.
Exactly.
Hang on a second. Have you I don't know if you've read this book. This is Robert Kiyosaki wrote this too. It's Retire Young, Retire Rich.
I haven't read that one yet.
In this book, he talks all about leverage, and I'd say half of the book is literally how to utilize real estate to advance yourself to the tax code.
Absolutely.
The point where he says it's when you're buying like 2 or 3 units, the government does help you out when you're renting things out, but it's not until you get to the 20 units, the 40 units, the 100 units where they're actually giving you credits because you're creating housing that nobody else can do. Absolutely. And they don't have investors who want to do it, so you're doing something the government's willing to actually subsidize. So it's like there's a lot in the tax code that actually they want to see entrepreneurs existing and expanding. They want to see investors expanding. And Chance, I think, you give people a chance to really crush it in the tax game, man.
That's it, man. How do we, that's my question is, how do we take money that was going to Uncle Sam and use it to fund and to build the empire that we're after? That's really what it comes down to, man. And so yeah, it's incredible. Like you said, the tax code, I mean, man, if you wanted to, there's rules where you could have offshore companies in Puerto Rico and pay 4% tax where you would have been paying 39% tax. I mean, it can get that crazy. But the first thing
for the last 30 seconds, he's like, "Oh, but you can do this strategy."
I know. If we get in the weeds too much, people will turn off. But I mean, but the thing to realize is that nothing is impossible. there are so many different ways to set up your business and to set up these expenses in a way that helps you, that if you go to someone, if you're having to have a conversation with someone and asking them, can I do this? Can I do that? That's when you know you're talking to the wrong person, right? Because there's no such thing as, you know, a lot of people ask, is this can I deduct this or can I not deduct this? The right question to ask is, how can I, right? And it might not be feasible, and it might not have the right risk tolerance, but the question to ask is, how can I, not can I?
Yeah. And we use that in success at all times. How can I do it? How is it achievable?
Exactly.
Right. It comes down to risk tolerance.
Mm-hmm.
Does the risk bring the right reward to take on this strategy?
That's it, man. That's it. And so, dude, to see people, you know, just like yourself that are going and building and doing and moving and doing it at such a fast pace, that's really that characteristic Uncle Sam is a fan of, because he knows that 10, 20, 30 years from now, people like you and I are going to be the backbone of our economy. So he's willing to give up some money now because he knows the benefit we're going to create 20 years down the road.
And on that note, guys, Chance Cerda, he is the tax pro. He's going to get you guys to the next level. When you have a choice, always work with the best.
That's it. I might steal that. That was good. Man, I've enjoyed this.
Dude, great stuff, Chance. I'll talk to you soon, bro.
Yes, sir. Talk soon.